massive bullish indicator just come in. We've had the ADP private jobs figure come in shockingly low, and this is hugely bullish for the markets. Bitcoin here moving to the upside, dollar index tumbling to the downside, and this is really good news for the markets because remember, we want the labor market to soften. We're going to break down exactly what does this mean for markets, where do I think the price action could lead us, plus my latest trades. If you want to trade in these moves, check out the link in the description to Bybit or BitGet, the two preferred exchanges I use. Couple that with our free Telegram group and you guys will be quickly up and running with your trading strategies. Guys, here Bitcoin moving up here nicely, bouncing off of its 5-minute EMA ribbon, but let's look at the bigger time frames. You can see here nicely reclaiming our hourly EMA ribbon and holding above it. Fantastic. 4-hourly EMA ribbon is where the business is at, right? Getting a nice bounce after a retest. This was so overextended. We spoke about that a couple of days ago. It had a cooling off, no problem, but now we're getting the remnants of a bounce. Remember, I said that this bounce has to go beyond 28.6, otherwise it's meaningless. We're just going to curl back over again. But what is leading this latest pump? And that is this. The private jobs figures came in. Remember, you get a private reading on a Wednesday, which is what we're looking at. This is called the ADP jobs figure. But then this is coupled with the non-farm payrolls, which come out on Friday. Now remember, these are Jerome Powell's favorite metrics. He decides whether he's going to hike or not by looking at these metrics along with PCE inflation, along with CPI inflation as well. So when you start to look at ADP jobs figures, you can see what exactly happened. The previous month was 177,000 jobs created. The expectation for this month, the September month, was 153,000. It came in at 89,000. In other words, guys, September showed the slowest pace of growth since January 2021 when private employers shed jobs. Now, why is this positive? This is positive because remember, we don't want the labor market to do well. We want the Fed to loosen policy, right? When the Fed stops increasing rates and decides to start pausing and then cutting and then eventually quantitative easing and printing money again, that is where risk on assets do well. That's when your tech companies do well. That's where Bitcoin does well. And of course, your favorite bag of altcoins. But that is exactly what we've not had over the last 18 months. We've had the opposite. We've had a tightening of monetary policy, interest rates climbing fast all the way up to the rate we're currently sitting at, which is the 5.25 to 5.5 mark. But now the market needs to understand that, hang on, is the labor market finally, after holding so much strength through this period, starting to show chinks in the armor? Remember, if you look at history, the Fed never U-turn until they break something, right? They hit the Titanic iceberg and then they go, oh crap, we need to do something. Let's pause, let's cut, let's do an emergency 50 basis point cuts. So this is going to excite markets slowly. Now we've got to take a look at the Fed rate monitor tool. Maybe the market's not priced this in quickly, but you can see already this has dropped down. This was sitting at 23%, was pricing in a 25 basis point rate hike at the next meeting. That dropped down to 19. So it'll be interesting to see, does that continue to fall? Does that fall to 15%? Does it fall to 10%? Do less and less of the market say we're going to get a rate hike at the next meeting? If that does happen, that will suggest more green, okay? Because that has to get unwound. Because if 25% of the market had priced in that we're going to get a rate hike, and now only 10% start to price it in, that's going to unwind that pricing in, which gives you greenness in the market. And that is exactly why, if you look at the dollar index here, the last 2 4-hourly candles have been nice and red. Now, I need to give you guys a realistic understanding of what's going on, because naturally when you get bullish data, it's easy to get super excited. But it's my job to be devil's advocate. It's my job to tell you guys what is the other side of the story that perhaps some of the sensationalist YouTubers and moon boys aren't telling you about. And the first one is staring you in the face. What trend is this, guys? This is the dollar index. It's starting from the bottom here and it's climbing all the way to the upside. That is an upwards trend, right? So for anybody to look at 4 red candles here and panic, right, about the dollar index, if you were pro the dollar index, you can't get too excited on this. This needs to lose its 4-hourly EMA ribbon for us to even start a conversation about the dollar index meaningfully pulling here down to the downside, pulling back. If you look at the daily chart, the story becomes even worse for us, right? Because remember, we're inversely correlated to the dollar index. We need this to be in a downtrend on the weekly time frame and on a daily time frame. And right now here on the daily time frame, the dollar index has not touched its EMA ribbon since August, the 31st of August. Okay, it's been on an absolute tear. So if it's having a little bit of a cooling off here, this is the cooling off everyone's getting excited about, right? It meaningfully needs to cool off. It needs to come into its EMA ribbon and then lose it. So what can happen, which is perfectly normal, is the dollar index could just decide to have a cooling off, and it could cool off all the way here into the EMA ribbon, and that would be a really deep cooling off, right? But even then, it's still got its uptrend. The next leg could still be here to the upside. So whilst the dollar index is cooling off here, there is a chance that Bitcoin has some positive momentum, right? When dollar index does poorly, Bitcoin can benefit from it. But that Bitcoin move cannot be a longer term move until the dollar index fundamentally loses trend, until it loses its daily EMA ribbon and really starts to break structure back into the downward channel. But that is not what we're seeing right now. What we're seeing right now is that the dollar index is firmly there, above its EMA ribbon. And even if it did decide to call off, it's got plenty of room to run into its EMA ribbon and call off. So what we're seeing here is a relief rally almost here for Bitcoin, right? Taking advantage of the dollar index having its move. But what's interesting is that currently we are seeing a little bit of a decoupling. We have seen a couple of momentary moments where Bitcoin is like, enough is enough. The dollar index, you do your thing. We're going to still try to run anyway. And the question I have, which I'm trying to analyze right now, is how sustainable is that move? Can it be that the dollar index continues the upward trend, which I show you, continue on the weekly chart, continue on the daily chart, but Bitcoin decides to explode up to 40,000 and beyond? That's what we've got to ask ourselves. Right now, we're above our EMA ribbon on Bitcoin, which is fantastic, right? We need to really push on above 28.6 and eventually start working higher highs. You guys know we've been monitoring this pattern for a while now. And we said, guys, got rejected from here, and then we got rejected from here. We need to get past 32. If we cannot get past 32 on this leg, there's a chance we just fall over with the head and shoulders pattern, right? So we need to be very, very cognizant of what's going on here on Bitcoin. Yes, it looks fun. Yes, it's positive. But at the same time, if this move cannot sustain itself, we are at risk here of forming a head and shoulders pattern. Let me just illustrate that to you guys here, for those that cannot spot it. And if you can't spot these patterns, ijaz.uk/TA, take that course and you'll finally start spotting these, okay? So you end up with a head and shoulders pattern, which is a bearish pattern, and break you to the downside. So it's imperative here on Bitcoin that not only do we sustain some bullish momentum, but we've now got to get past 32. Anything below 32, even if we have a nice move all the way up towards 31, a nice move here, 31, and then just cut over, not a great look for Bitcoin, because then it shows that once we tried, we failed, twice we tried, we failed, and the third one, we couldn't even get to 32, we just curled away before then, shows huge weakness on the parts of the bulls. So it's very important that we can understand what is going on there. We then want to take a look at what's going to happen on Friday, which is going to be our non-farm payrolls. It's critical that the non-farm payrolls back up the data which we just saw from the private jobs figure, right? If this showed a meaningful cooling off, we want to see that non-farm payroll show the same cooling off. If it shows a different story, the market's going to be confused and start to panic again. If we want the dollar index to really correct it to the downside, we need to see those economic indicators come in our favor. We need to see inflation cooling off. We need to see the jobs figure softening, which give us a clue that the Fed may decide to pause, stop the hike, and start even planning some cuts sooner than they've predicted. Because remember, they've taken a lot of cuts away for next year. The market currently had to adjust to the latest Fed figures we had, where the Fed said we're only going to do about 50 basis points of rate cuts next year. And we're going to do one more 25 basis points this year, either in November or December. So the market doesn't have a lot of cuts priced into the market. Now, if the data starts showing a sign of what we just spoke about, jobs figure softening, and also CPI softening, then maybe Jerome Powell and the Fed officials will have to revise the outlook and price in more cuts into their projections. That's going to be exciting, and that is where we can really start to see some movement here on Bitcoin. So guys, looking good in the market. It's nice. We're above our daily EMA ribbon, which is fantastic. Really, really positive. And last but not least, let's check in quickly here on the weekly EMA ribbon, because this is the one you really want to look at. We've got 4 days left before the weekly EMA ribbon closes. I don't want to close back into the EMA ribbon. Even if we have a red week like we are now, if we close here, that's fine. We're still above our EMA ribbon, and we can open up next week as positive. But again, if we can continue to finish this week off strongly and even turn it a little bit green, fantastic. Nice break above EMA ribbon. This would then become a confirmation candle, which is green, and we're going to move nicely to the upside. Guys, if you're looking for trades, ijaz.uk/TG, I share free trade alerts. Plus, there's a paid subscription where you can get access to our VIP signals as well. So you can learn exactly how I do my setups, how I trade for educational purposes, and see exactly which tokens I get in, how I do my stop losses, how I do my risk management, and how I build profit profits in crypto. Hopefully you guys enjoyed this video. If you appreciate this type of content, smash up the likes. Don't forget to subscribe, and I'll see you in the next one.